Yeah, I think there are refinancings that are bilaterally driven, where there's a bank that's still in the process, where those will be, where either sponsorship is no longer willing to put in equity to cure the breaches and sort of help do the refinancing. And then there are cases where sponsorship is gone, in which case the bank will ultimately sell the assets. And interestingly, I think we're starting to see a number of defaulted securitizations as being a source of product in cases where it wasn't a single asset or a single portfolio, but it was a pool of loans where the loans were secured by multiple assets, where there are tranches of these securitizations that are busted, and insolvency administrators are beginning the liquidation process. So I think we're actually working on a couple of those right now. So we're seeing product from that. So that's cases where banks are already totally disintermediated from the process. And then on the other side, the first category I mentioned, where the banks are still involved, and then it's a question of whether the sponsor remains involved. So I think you'll see more of that. That's a pretty good source of product right now.
And within those portfolios, are there also elements of prime within that?
Yeah, it runs, to my bankers, my former lenders' comment about focusing on the real estate now. Clearly, there's everything, since they weren't so focused on the real estate before.
I think there's no single answer for that question. There's a little piece of everything that you mentioned. Whether it's debt, whether it's the open-end funds, which are largely closed. There are opportunities everywhere. I mean, the biggest example was just announced last week, where a big office portfolio or office property was sold out of the Royal Bank of Scotland, which was originally a Mesref product, where they basically dropped the keys off at the bank, and 3 years later, it's now come to the market. And you slowly seeing those type of opportunities, because banks can now afford to take a hit here and there, which hasn't been the case. So I think that trend will continue. But as always in Germany, nothing happens overnight. It's very slow, and in respect to the market, the numbers are small. If you're talking about billion euros in CMBSs and non-performing loans, you may see hundreds of millions of deals coming out of that, and not billions, and not overnight, but in the course of the next 3 to 5 years. The same thing with the open-end funds. As most of their problems are outside of Germany, so that's where they're dealing with issues first. And once they start hitting their German portfolio, for legal reasons, they can't sell below book value. It takes 3 to 5 years to wind that portfolio down as well. But nonetheless, there are deals happening today, but they're small deals, and you need to be aware of where the action is. And you just mentioned all the headlines where if we were to be in a position to buy, we would look.
Yeah, well, we are more interested in the open-ended funds that need a wind up. So we are not actively looking at typical distressed stuff ourselves. But it's quite hard to find an agreement with these guys. As Alex mentioned, they are not allowed to sell at any price. And so I think we bought 2 or 3 properties so far from our colleagues. We are actively monitoring their portfolio. And there is certainly something in the portfolio which is of interest for us, but not everything. So, and there's, I would guess, only few properties which are very core, which would be of interest for us. And therefore it takes some 3 to 5 years for them to do the wind up, and they need a market cycle to do that properly. And there will be some pain for the investors in these funds too, because of the situation. I think we have net inflows of 1.5 billion this year, so it's a luxury problem that we face. But still, it's quite hard for us to get an agreement with these guys out of the open-ended funds. I think it's about 20 billions that need a wind up, roughly. And I think 20 billions in 5 years should be okay for the market. Shall be no problem.